Hello, it's Mr. Intermarket Analysis. I'm just bringing a review of oil, US crude oil. Basically, I've just spotted a setup here. Thought I'd share it live. Not live, well, basically a trade that I'm most likely going to do in the week ahead. Okay, and just share the setup because trading is all about setups, choosing the optimal and the best setups out there. Okay, and obviously, if you continue to do so, and we're buying at 89%. Obviously we'll always be in the money. Okay, so here's a setup based on fundamentals and technicals. So basically the fundamental reason for oil going higher, reason number one is the fact that the talks between the United Nations and Mr. Kerry have failed over the weekend. Some news that's been released regarding the Associated Press. French Foreign Minister says Iran nuclear talks failed to reach a deal. Okay, so obviously that then creates a potential short squeezing opportunity on oil, given the fact that, as we can see on the daily chart here, you had a H&S formation which I called for, and obviously I played in the downside. I had a hedge trade where I was long gold and short oil prior to the FOMC. Obviously that did very well for me. I got out as soon as the opportunity or the possibility of tapering was still open in December. Obviously gold was going to get hit, so I exited that trade. Okay, so that was quite a lucrative trade for me. But on this occasion now, obviously I played the oil on the downside as well, and certainly did well for me. And now on this occasion, now I'm playing it on the upside. Okay, given the fact that Chinese data over the weekend was relatively strong. Okay, and it has been relatively strong over the last week. Okay, given the fact that German production was pretty stellar. Also, UK data has been pretty stellar as of late. Okay, so that certainly supports the growth argument temporarily. Anyway, certainly temporarily speaking. Okay, and given the fact that the US markets did short squeeze higher quite considerably on a Friday, certainly embrace some type of risk, whether that's manipulation or not, that's irrelevant. This oil certainly needs to play catch up. The counter argument, obviously, for oil going higher is the deflationary fears that exist. Okay, but I think that geopolitical fears will trump those fears, given the fact that the Iranian negotiations have obviously failed to bear or come into fruition. Okay, so technically we are oversold based on this. We've got horizontal support here on my chart. Okay, so certainly a lot of horizontal support there. We are looking to short squeeze now, so all those positions that were heavily short will be looking to close and move higher. So that's the reason why I'm looking for a potential bullish opportunity here based on the daily chart to around the 98.5 level and higher. Okay, possibly test this red trend line. Okay, now let's go to a smaller time frame and I'll give you my argument based on that. Okay, which is quite powerful. Okay, so let's look at a 10-minute chart. So we obviously closed the gap on a topping tail there on the Friday. We do have a gap below around the 93.5 level, which has been unfilled. We need to close. I do think we will close up, but not yet. We are going to close the gaps higher. We've got a gap here first of all at 96.3, and then we have a gap again higher, which is around the 98.2 level, which obviously coincides with 200 MA on the daily chart, so keep an eye on that. So unfilled gaps above first, folks, before we fill the gaps below. Okay, now because ultimately, given the fact that we've got deflationary concerns, we will go lower, but at present the geopolitical concerns and the failure to reach a deal, given the fact that a lot of people are short going into the weekend, expect the deal to be reached. Obviously that's negative for oil, provided there's no geopolitical concerns, etc, etc. And on this occasion here, so 60-minute charts. Okay, 60-minute chart, we've got an inverted head and shoulders formation. The market and the right shoulder has held above the 75% fib retracement, which is fine. Okay, held at 61% for the right shoulder, so that's certainly active. Okay, the first obviously gap you can see there is 96.3 and obviously 98.2. So there's two gaps. So you've got a downward sloping trend line which we've broken out of. Okay, which you can see here. The 20 MA is starting to slope sideways to upwards, so momentum now starting to move higher. Given the fact you've got a right shoulder, you've got a bias change principle there because you've got no lower lows. You've had a higher low, therefore obviously bias change principle dictates that you're going to make a higher high and higher lows now in a series in order to move higher. Yes, okay. So inverted head and shoulders target, you've got the neckline around the 95.2 level down to 93.2, so that's a $2 move higher. So you're looking minimum of around 97.2. Okay, so $2 move higher on oil, that's what I'm projecting. That should inflate gold temporarily, so gold should certainly catch a bid I will try and do a video on gold, but if you look at gold, there is a potential for IHS formation there as well. Okay, so certainly have a look at that, and that's the trade that I'm looking at playing this week. So two targets, 96.3 to 98.2. More than likely we'll get 98.2 on the spike. Obviously oil traders know this particular instrument loves its spikes. And don't get me wrong, we may even see a spike to this 200 MA around the obviously back to the $100 mark. But again, that is quite ambitious. Okay, so I think I'll stick with the call for gap fill first of all at 96.2, and then obviously 98.2 as well on the spike. I think that will be sufficient. Once it gets there, yes, I'll be short in this particular commodity down to that 93.5 unfilled gap below. Okay, folks, risk on, risk off, wax on, wax off. Goodbye.